We focus on why the Geelong region makes strong investment sense. These statistics, as presented, demonstrate that the Geelong region, as a result of major undersupply of land and housing to meet the growing demand, is presenting well to buyers right now. Demand for land is compounded by a huge amount of housing needing to go there to meet the current and planned population growth. Ensure that the principle of economics of supply and demand will kick in. We are confident that you will enjoy the opportunity we will share with you in this video presentation, brought to you by industry expertise and summarized by properT Network.
Hi, my name is Stephen Lazar, the Director of properT Network for the past 18 years. Thank you for affording me the opportunity to present why Geelong in Victoria makes investment sense to you. Actually, why Geelong land supply, or lack thereof, is a slow-moving car crash waiting to happen. A very senior project manager who works with significant land developers who are also involved in land sales and marketing in the region for the past 15 years, meaning they're well versed in the space, have kindly shared the following information with us and now you. They've lived through the last 3 property cycles, and the key factor in regards to the laws of economics and the laws of numbers is land supply. They share that the thing that is so dear to their heart, and why it's so dear to their heart, is that there is a land supply issue across Victoria and very much so in Geelong. This is the primary reason why to date there's been such amazing growth in Geelong over the last couple of years. There has just not been sufficient land supply to keep up with demand, which we will unpack as we go through this presentation. We will talk about the current market, about the planned population growth, which is a key driver on the property market and land supply in Geelong. The same group sits on various groups in Geelong that cover off on land supply, population growth, government, industry into investment, infrastructure, etc. And so the information that is provided here is from people who live and breathe in this industry and are pretty much in the know. They have a lot more visibility as to what is occurring on the ground in Geelong, and more importantly, where the new growth corridors are at from their point of view. So what do we need to happen in the next 6 to 12 months for the property clock to start ticking? Greater Geelong has a massive target of 5,000 homes per year. That is to satisfy the 3% population growth rate that is occurring now. The question is, where will all this land come from? This, knowingly, is a slow-moving car crash, referring to the lack of land supply in Geelong versus forecast population growth. This scenario was identified years ago by the industry. We remain in the exact same situation and nothing is changing. In fact, it's actually getting worse. So, why is this important?
What this is showing is overall sales across Geelong and Melbourne, and this amazing bit in the middle, which was home builder driven post-COVID. With home builder incentives, the phone started ringing, and there was a significant amount of titled stock at the time. The market was just coming out of the last cycle, which was the credit crunch, and that got sold through really quickly. So there's been a significant amount of buyers, a low supply of land, and that's one of the reasons why sales rates in Victoria have been relatively subdued since this take-up. Obviously, the other major reasons is the cost of money and people's lack of ability to borrow what they need, especially with nervous first-home buyers waiting to see what's going to happen, as well as investors. With the recent advent of the introduction of the 7-star rating, what that did was actually boost sales results. In May, being the highest amount of sales since mid-2022 across Victoria by buyers wanting to avoid the increasing costs brought about by the introduction of the new 7-star rating system. This slide actually focuses on Geelong sales volumes only. In Geelong region, they had a similar situation where in May sales increased, and since then it's come back just a touch. The key thing I get from that is if there are enough reasons for a buyer to purchase, such as the extra $20,000 or $30,000 of additional costs incurred to meet the new 7-star rating system, buyers become motivated to commit to a purchase and build a new home on the lot. There was a really strong incentive to sign contracts at that time, and this is why buyers decided to pull the trigger and purchase. So that tells us there are buyers out there. They just need a reason to buy or to invest. In this slide, we're highlighting what demand spikes can do in the short term. The grey section in the middle is a balanced market, but we're not in a balanced market now. At the moment, we're in an oversupply market, meaning there's more land now than what there are buyers transacting. But just with 7-star rating, you can see what that did to the amount of stock on the market in a very short period of time. Now, as sales come back, stock started to increase again. Here, balance in supply and demand meets, which is amazing. This means that everyone has an opportunity to buy something and that there is an incremental and sustainable growth in the market. What happened after the last boom was that there was an undersupply, and that is where you see significant issues around supply and demand, and thus affordability. This slide is showing a longer time frame with regards to sales volume only, demonstrating the amount of lots sold in Geelong and Melbourne over the period of 2009 to 2024, showing 3 key cycles there, which include GFC period, where sales volumes definitely dropped. We now overlay consumer confidence over this chart while still identifying the last 3 peak to trough volume periods. In the last 13 years, consumer confidence has dropped below 100 3 times only. Right now, we are well below 100 on the consumer confidence scale. This is very low. What happened during GFC period is while it took a period of time for the market to start to navigate on the next upswing, developers were cutting lot sizes to, as they say, assist with affordability. Prices did not come back, but lots got smaller. And we are obviously moving in that direction once again. The key thing here, so the green line across the top, this reflects consumer confidence. It is the metric that tells people that they're happy to do something. At the moment, is quite low, and once again it ties into obviously inflation, cost of living, interest rates, and other market factors. In summary, consumer confidence now is lower than what it was during COVID and what it was during the GFC.
Land prices did not come back, but lots got smaller, and we're obviously moving in that direction once again. The key thing here is consumer confidence. That is the metric that tells people that they're happy to do something, and at the moment it's quite low. And once again, it ties into current inflation, cost of living, and other market factors. Consumer confidence is now lower than what it was during COVID and what it was during the GFC. The Australian property market now needs some positivity to regenerate and come out of the current slump over the next 6 to 12 months, shifting the market into the next property cycle, which is only a matter of time before the market starts to accelerate out of the current downturn. You can look back at the time frames in regards to the last 3 property market cycles, and we know that the property market is going to come back at some stage because there is pent-up demand and suppliers are just starting to refill the bucket with regards to clients. A priority is to ensure that the market does have sufficient supply Victoria-wide, because when the current demand increases and if there is insufficient supply, we will start to see price escalation again.
We all know that one of the major drivers of demand is population growth. This slide indicates net overseas migration to Victoria. The gap in the middle is COVID. We are well back up and running in regards to that. And the actual quarterly average, compared to pre-COVID, which was 31,000 people, the average at the moment is 46,000 new people. This slide and the next slide is delving into population forecast. This is a snip from a detailed report that the UDI commissioned, and it talks about property and population growth scenarios. There's a number of scenarios presented here, going from A to E. If you look at the long-term historic number, it is 1.3% population growth per annum. Then you've got scenario C, which has the growth that the council thought would happen. So this is 2016 to 2021 being 2%. These numbers have been extrapolated from the previous slide, which is demonstrating the unpredicted growth surge. Council did not predict this 3% growth in population per annum over that period of time. From these census, the percentage per annum growth rate in Geelong from 2016 to 2021 was a significant 3.03%. This surge was not predicted nor planned for in terms of land supply in Geelong. Every year over that time period, Geelong's population increased 3% per annum, a substantial increase in population, affecting dwelling availability and price growth.
Now, there is a website called Forecast ID, which all councils and Geelong Council refer to for data. And when you review this data, it demonstrates a population growth, which for Geelong, it only shows a specific percentage amount of 1.9% only. Now, councils refer to this data, which they rely on when making decisions on housing needs, roads, schools, infrastructure, investment, etc. Yet, if we just run the numbers at current growth rates of 2.5% or 3%, where current population growth sits at around 280,000 residents, if it is 3% growth, in the year 2041, we will have close to 500,000 people living in Geelong. Geelong at current, its double size, means they need lots and lots and lots of land and new housing. And Geelong Council, for some reason, only remain focused on the lower number of 1.92%. This is fraught with danger.
We continue with the various scenarios, and this is the Greater Geelong dwelling forecast. In scenario E, this demonstrates that the 3% population growth of Geelong per annum, the city of Geelong needs 5,000 new homes built every year to cater for this growth. Not all of that is going to come out of the new Greenfields areas. Greenfields is projected at 3,000 homes, which is a rather significant number of homes to cater for people moving to Geelong. The balance could be infill and or gentrification. Since the numbers were published, there is a government website called Housing Targets, which is a draft interactive map. Clicking on the Greater Geelong Council of 2023, there was a staggering 127,300 homes in Geelong, and by 2051, the target is another 139,000 homes. So, if you can imagine Geelong, and it is doubled in size, that is what the expectation is. This is a massive target of 5,000 homes in Greater Geelong each year, which, once again, to cater for the 3% growth rate. The question is, where does all the land come from, and can they deliver? This is expected to be a slow-moving car crash, referring to the lack of land supply in Geelong versus the forecast population growth. This was identified years ago, and the same situation would occur, and nothing has changed. In fact, it's actually getting worse. So, why is this important to you? Well, if you're wanting to buy, to live, or to be an investor, you should have the confidence that the value of your purchase or investment is going to grow significantly. It's a numbers game after all. Looking at the blue line in this slide, it represents titled land, being constructible blocks of land, and the green line is off the plan untitled land. If you go to Armstrong Creek right now, which is the only one of two estates at the moment in which you can buy a block of land, those lots are only going to title in 2025. So what's going to happen? Where to from here? The market says interest rates will go down, and everyone will go, yep, let's go, it's time to purchase. And the result will be significant unmet demand. Those purchases will burn through the titled stock pretty quickly. The issue with the untitled stock is it is physically impossible to build a block of land overnight. It might be 12 months to 18 months to do so, to be able to get new supply into Geelong. It just won't happen in the short to medium term. A quick look at remaining lots show that Western Geelong Precinct has 25% of land supply, Northern Geelong Precinct a low 6%, and Armstrong Creek the major supply of 69%. This is then highlighting where most of the remaining land is in Geelong. So there's 4,000 potential lots in Armstrong Creek, demonstrating the largest population growth sector being Armstrong Creek. The Armstrong Creek Growth Corridor picks up 3 suburbs being Charlemont, Armstrong Creek and Mount Dunedin. What we want to highlight here is there is still some missing pieces of the puzzle, and what is noteworthy there is the reason why some of these areas have not been developed, and that is because they're potentially very difficult to be developed or the owner has no intention of developing them. What this indicates is that there is a high shortfall of land in the land bank of Geelong that is able to cater for this predicted increase in demand on the back of population growth. Supply is lacking now. Further increase in demand will be disastrous for buyers and fantastic for investors. Think about it. Herein lies the opportunity for investors. Our disclaimer here is that all suggestions about potential capital growth are based on market indicators and not qualified statements. This graphic demonstrates where most of the land sits and supplied by the entities or the groups that are able to supply significant amounts of land, which are the big master planned communities such as the Warra-Lilies or the Armstrong Creeks, and a handful of others. All of these projects, even with a slight uptick in the current market, will be done in the next 2 years. They will be finished. The question is, who will then be able to keep up with land supply for the continued 3% population growth? Their problem is your investment opportunity. How exciting is this opportunity for investors going forward? This slide starts to talk about that. The blue bar is the active projects, the potential amount of land on current price lists or that could be brought to market. The last 2 bars are those yet to be zoned. The grey is a future supply, so that is the Lovely Banks, the North and Western Growth Corridors, which is highlighting one of the future supply furphies, because we don't necessarily know that these lots are even going to be developed. The irony in Geelong is when you are asleep at the wheel, there is just no problem. This chart is talking about the amount of land. And right now, these new growth corridors, which are supposed to house 120,000 new residents, are well behind where they should be, meaning these new growth corridors, which are supposed to house these 120,000 new residents, are behind schedule and should have been operating at the same time that Armstrong Creek was operating. It was meant to be a smooth transition, which just did not happen. The first major PSP is planned to come online in the middle of 2026. This is the Lovely Banks development, which is the Elka Road East down the bottom of the slide, expected for November 2026, if there are no delays. The development director who looks after Elka Road East and also Lovely Banks states it should have been done 2 years ago. Since he started, there have been 2 years of additional delays from original planned and budgeted for time frame, meaning further delay in the new and much needed supply of lots. A question is, if land supply pushes further out, what will that do to the prices? Here is another slide which talks about land supply. If you want to circle the time frame when the crunch of the car crash is going to happen, it's probably going to be late 2025 into 2026. This is the time where land supply will be at its lowest in Geelong, based on the expected market demand upswing, which the market is confident will occur.
The question becomes, when land supply timelines are pushed further out, what will that do to the prices in the area? It is obvious that the results of delays will push land prices upwards. And we also know build costs will increase, which is great if you've got land or intending on purchasing now in the short term, but not great if you're going to be a first home buyer or considering investing in the region, but you're waiting to see what's going to happen.
When it comes to infrastructure, where a government invests in required infrastructure in the region, this not only creates new jobs, but it also attracts population growth to fill these jobs. Government also then invite industry into the area to invest, which also create new jobs and attract population growth into the region to fill these jobs. This population growth then puts further upward pressure on supply of land. The Geelong region still has heaps of money being invested into infrastructure, such as the $250 million investment into road upgrades in the Armstrong Creek area. There is also investment into 2 new schools going into the Armstrong Creek area planned for 2026. And there is an exciting $3.3 billion of investment going into Avalon. Why is it going there? Purely because of its close proximity to Geelong, to these growth corridors, and also to suited land availability for industrial use. The watch list. Lastly, what's the major thing that we need to see? Yes, easing of interest rates, followed by easing up on inflation, and then higher land release and absorption of titled stock.
Are you now considering or thinking of being a home buyer or an investor, but you're waiting to see what happens? Think about it. If you decide to buy when the interest rates actually drop, you will not be able to get the current discounts or incentives that the market is offering you. And nor will you get the current pricing per square meter for land. Because if you're rolling to a sales office or tender an auction, once those interest rates have dropped, you'll be too late. Because of supply and demand market conditions that I've shared with you in this presentation. Because you're meant to be doing it now over the next 6 to 12 months if you can. Because based on current market conditions, you may agree. I want to thank you for joining me on this presentation, which is a summary of a presentation recently given in Melbourne in August 2024 by a professional in the industry with over 20 years of experience in land sales and sitting on various industry councils and who has inside knowledge of what is going on the ground in Geelong and Victoria. Proudly brought to you by myself, Stephen Lazar, the Director of properT Network, who attended the presentation and has compiled this video blog for you based on their information shared with us on the day. Ask us where to buy to live or where to secure your next investment property, and let's share a conversation. Thank you for being online with me. I hope you received much out of our presentation and that you're open to wanting to share a conversation. So click the button here now and let's have a chat. Thank you for your time.